Now, real simple question that just came in from Amer is there short-term puts? Absolutely, Amer. Now, I don't know if you're referencing buying puts shorter term, which I typically would not recommend, or selling put options, cash secured or naked put positions. Yes, on Power Options, we support all of the weeklies. And of course, you can search for the daily 0 days to expiration naked puts, credit spreads, iron condors, and other strategies as well. So let's take a look. To start, if we go to the naked put strategy, tab navigation system here in Power Options, Amer, the naked put has monthly picks of the day and weekly picks of the day. Now, this is just a quick view that you can see. This would be selling put options, out of the money, of course, on a stock that you wouldn't mind owning long term, but you're looking to earn a reasonable profit on it, have the stock remain neutral or bullish, have your put expire worthless, and continue to make that trade going forward. However, if the stock does fall slightly and the stock is put to you, the obligation of selling a put, of course, you may be forced to buy shares of stock. Well, you could now convert it into a covered call, married put position, or a collar position as well. The monthly picks of the day and the weekly picks of the day, Amer, for selling put options are based on Ernie's extensive testing that was done over different market conditions to see which structure, stock criteria, range out of the money, and probabilities resulted in the best returns over time. Assuming that no management was involved, if the stock was below the put strike price, it was assumed that the put was just bought to close at or near intrinsic value. And if it moved up and the put expired, then we'd look for the new positions the following Monday, following the previous Friday's expiration. In the naked put picks of the day view, you can see the introduction about the testing goals, process, and rules, the testing period that was done, testing conditions, and return results. And so over the testing period, 53-week testing period, the return was 47%. There were 25 losses. It's showing an average of 2 to 3 trades per week. The goal was usually to look Monday afternoon at around 1:30, 2 o'clock in the afternoon, find positions that match the criteria. And of course, 76% win ratio with an average of 2.1%, and using a stop loss that's discussed there as well at 7%. Now, the following note at the bottom says these naked puts might be rather speculative, considering you see names in here like Rivian, Weight Watchers, Affirm Holdings. These have some rather high implied volatility, 0.7356, 0.8322, 0.7171. Is that really high? Well, let's take a look. One of the other features real quick we have on Power Options, if I go into the Home menu and I go to Learning Center, we can go ahead and take a look at the market activity link here. Of course, there's other things, strategy help, link to the webinars, market activity, and much more. Under market activity, I want to click on optionable stock statistics. The optionable stock statistics page is going to give us a quick view of the high, the low, and the mean of various stock and options criteria across the entire universe of options. The average stock price across all optionable stocks is $46.76. Now, scroll down to some of these other things. The average earnings per share growth is 29%. Average dividend yield, 1.9. Let's get into the volatility range. The average 20-day volatility is 0.36. The average implied volatility on all options across the market is 0.93. So even though those picks of the day are showing ranges that I would consider high, maybe above 0.6 or 0.65, we sell 0.7s, 0.8s, and so forth, they're just below the average implied volatility across the entire market right now. Which to me is rather odd because the VIX seems relatively low at 1752. Now that's comparative to the last couple of years when we've seen the VIX at around 23, 24, and 25. But again, just a few years ago, remember, 2018, 2019, we were seeing VIX in the ranges of 11, 10, 9 even, and averaging probably around 12 or 1150 or so. So 1750 is still pretty strong, but it's not in that range of 25, 23 that we've seen in the past. But all that being said, this quick view, which was run at 3 p.m. Eastern time, just one update per day, shows you the short-term naked put positions that would match Ernie's exhaustive testing for various criteria, probably about 75 to 85 different criteria sets of varying stock criteria and option criteria to see which one performed best over that time period. Now, this view, as I mentioned, is a simple view. It's a quick view. It's updated once a day at 3 p.m. Eastern time. However, if you just go to the main naked put search Amer, we're going to be able to see the current, what was updated at 4:26 p.m. Eastern time this afternoon. Here's the monthly picks of the day, match that other criteria. Let's change it to the default weekly picks of the day for this structure. We still see Rivian up at the top, but rather than Weight Watchers and Affirm, the next three sorted by highest naked yield for the next 7 to 5 days, we have Xpeng, Palantir, Sarepta, Sentinel, Cloudflare, and so forth. Affirm is probably still on here, as is Weight Watchers, but let's go ahead and see if it's on the second page. No, actually, neither one of them are still in the list after the recent update to match the default criteria. So although the picks of the day gives you that really quick view of the top 3 or 4 that were done when the last update was presented, 3 o'clock this afternoon, you can always see the most updated results if you're on the 20-minute delayed subscription or the real-time subscription on Power Options by going into the direct search and selecting the default criteria, weekly picks of the day or monthly picks of the day. Now, to follow that up, what if you didn't like Rivian? You don't like Xpeng. You don't like some of these positions that had that higher implied volatility. They're in that 0.7, 0.8, 0.9 range. You're more interested in shorter term puts, selling shorter term puts 4 or 5 days out, for example, on stocks that have more stability. Maybe stocks in the Dow 30, maybe stocks with a lower historical or stock volatility. Things maybe like IBM, McDonald's, growth stocks that you might want to see longer term that pay a dividend. Now, normally I like to do a covered call on those positions, but it doesn't hurt as well to do naked puts on those positions that are more stable. With just about 9 clicks, I'm going to say 8 or 9 clicks of the mouse, we're going to quickly create a search for 1 week out naked put positions on stocks with a high market cap. They're trading above their 20 or 50-day moving average. Since we're using weekly, let's do the 20-day moving average. And still are giving us a good 0.5, 0.6% return. It's a trade-off, right? Here we're seeing 2.6% naked yields, 1.7, 1.1. But if I go with those larger stocks, and some larger stocks are in here, CrowdStrike, Western Digital, Cloudflare, and so forth. But we're going to have to give up a little bit of premium for the reduced risk. Lower volatility, lower implied volatility. It's going to mean lower time value, lower inherent risk, so we're going to have a lower premium. But let's just go ahead and take a look. First thing we're going to do is we're going to clear the filters. That is 1 click. We're going to leave our expiration time frame at all expirations, and we're going to set our days to expiration to be just between 2 to 9 days. Why am I choosing 2 to 9 days? The reason why is because when we get closer to Wednesday, I might not want to see the Friday expirations that are only 2 days away. I might. We're going to show a different search on that in a moment. But in this case, if I'm focusing just on the weeklies, if I'd close some positions out on Wednesday or so, I might not want to see the ones that are just 2 days away. I might want to see the ones that expire next week that are 8 or 9 days out in time. So we're just going to leave it at that. We want to look for lower implied volatility. We saw the average across the entire optionable market was 0.93. I'm going to lower this down to less than 0.75. So 1 click to clear. Hey, 1 click to enter in these values. Well, let's call it 2 clicks, 3 clicks here for implied volatility. So we're up to 3 clicks. I still want a decent naked yield. That's 4 clicks in this box. So we're going to try, knowing that we're going to look for higher market cap stocks and stocks in an uptrend, we're just going to go 0.4% or higher for a 5 to 7 day trade. I'm going to want to see some good open interest. I'm going to put in an open interest of at least 100 contracts. Shouldn't be a problem with the stocks that we're looking for, but that's okay. So now we're at 5 clicks. I'm also going to want to have some protection. I want to be some range out of the money. Here's our 6th click. I could use probability, and I'd actually prefer to use probability, so I'm going to use probability instead. Let's mix out that percent out of the money of a 6th click and put it here in percent probability. I'm going to use a probability of at least 80% or higher. The theoretical probability the stock will be above my short put strike price at expiration, so the put expires worthless and I keep the premium. 7 clicks. I'm going to go to the technicals. And what did I say? I'm going to look for stocks that are trading in an uptrend. So that's 7. I'm actually going to go to about 10. My apologies. So we're going to look for stock price to be above the SMA 20. That was 2 clicks right there. So that now has us at 8 clicks. Then we're going to click on the fundamentals. And I said I was going to look for large market cap stocks. Now, this is measured in millions here. So I see the mid to large cap is 2,000 to 15,000. We're going to use the large cap, just 15,000 or higher. So that was clicking to the list, put us at 9, and that I believe was 10 to click into the box for 15,000. Let's go ahead and click the submit search. Okay, so I'm at 11. My apologies. 11 clicks of the mouse with some entry. Rivian is still up there. What else do we have? AT&T. Exactly what we thought, 0.6%. Cloudflare. Roblox is in there, 28.96 at 0.5%. CrowdStrike, Nike. Strong earnings the other day. Missed sales in China, or I think weakness in sales in China, if I'm not mistaken. You can correct me on that one if I'm wrong. But they still did pretty well, a 0.5%. That's what you would expect with the 80% probability. Stocks at 95.62. Looking at the 6th of October 93 put for 40 cents. That's our 0.5% return. Palantir still stayed in there. $16 stock, selling the 14.5 strike for 6 cents. Not a lot of premium, but it is a 0.5% yield as well for those terms. The reason why we're not seeing the 2.5, 1.7% returns is because I upped the probability to be above 80. That put us further out of the money at 4, 8, 9% for some of these positions, which means lower premium, but still a reasonable naked yield, and which gives us what we call the higher percent to break even for the cash secured naked put strategy. All right, so that is something to consider. That's for the short puts, the naked puts, how you can start with our defaults, the weekly naked put picks of the day, or with just 10 or 11 clicks, you can create your own search to find specific criteria. Why are we not seeing Apple, or why are we not seeing other positions in there? It's because they don't meet the criteria. Either they're all large cap stocks, we know that, but they might not be trading above their 20-day moving average. There might not be an option on those stocks that has the 80% probability we're looking for with still at least a 0.4% naked yield. Okay, so if the system isn't limiting it, it's standing across the whole universe of options there, Amer. But again, if you don't see something that matches your criteria, it's because it isn't there. Let's take Apple as a specific example. How would I check? Hey, Mike, I ran this search. I looked for these stocks. I thought Apple would show up, or Meta. More of a question in relation to that a few months ago. But it didn't come up on my search list for these basic criteria of high market cap, stocks above the 20-day moving average, and minimum naked yield of at least 0.5% or 0.4%. My apologies. Why aren't they there? Well, the first thing I would do if you called me on the phone and asked me that, and the first thing you'd want to do is go ahead and check it. Go into the symbol field here. Let's just go ahead and type in AAPL. What I'm going to do now is go into the quotes page. This is the stock quotes page. It shows me all of the current information of the option. Now we look for less than 0.75. Okay, that's there. The implied volatility is less than 0.75, no problem. Market cap, I don't even need to look at, but yeah, we could look at that and we know that, yeah, it's going to be above what we're looking for. But how about that simple moving average? The 20-day moving average is at 177.84 and Apple's at 171.21. That's why it didn't come into the criteria. It is below the 20-day moving average. We were looking for stocks that are in an uptrend above the 20-day moving average. That's why Apple's not there. Does Apple offer a weekly option with a 0.4% naked yield for next week with an 80% probability? That's the other factor. Let's take a look. We can link now directly to the option chain. We'll go to the next week out, October 6th expiration. And let's just keep it simple and look at the put chain only so we don't have the mix of the calls and the puts. We have more data in there. Let's look for that percent naked yield, 0.5% here. Looks like the 167.50 strike at 88 cents, and the probability above is only at 74. The 86% probability that would have matched the criteria if Apple matched that SMA 20 we were looking for is only 0.3%, so it would have been filtered out as well. However, this might still be a trade that you want on Apple. An easy way to do it is just go to the options chain. You look at the puts only chain. We're showing you the returns that it would be if you sold it as a cash secured put, the percent naked yield, percent to break even, excuse me, folks, downside protection, and you can customize the columns any way you want to. So we have our search. We have our questions of why didn't this come up in my search, Mike? Take a look at the quotes page by putting in the symbol here in the symbol lookup field, clicking on quotes. Analyze your stock criteria as to why it didn't match. Was there something there that didn't work? If it was above the 20-day moving average, then link to the options chain and the put chain, Amer, and then you can quickly see, hey, this had the probability I wanted, but not the return. This one has the minimum return I wanted, but not the probability or range out of the money. That's why it didn't come up in the results, because it did not match the specifics of all of the criteria. Now, although I said I was going to do 8 or 9 clicks, it ended up being 11. This simple search we just created for weekly screens, and no, I have not back tested it. Let's do maybe some of that. Let's call this high market cap. $9.29. There we go. 80 probability. I can't spell today, folks. High market cap. 0.4% yield. And of course, the 100 open interest, but I don't think you'll have any problems with that. All right, so we're going to come back to that later, Amer, but I just wanted to show that, number one, as to, yes, we offer the short-term options, all weekly and even all daily options that are available that expire, say, on Monday. How could we find those? Start from scratch, real simple. Hit clear filters. All expirations. Let's just put in 1 to 3, or 1 to 2, I think. No, I'm going to go 1 to 3. I apologize. No. Yeah, I'm going to go 1 to 3. I might not get any results here. Percent naked yield of at least 0.2. We've got to lower that down and just make the percent out of the money maybe greater than 0.5. I'm not going to use any other criteria because there's few limited options, securities that offer the dailies. Maybe I have to go to 4. I might have to go to 4. I'm forgetting about the weekend time frame. There we go. So you've got the Russells. You probably have some SPY, SPX in there on the different pages. But again, just going 1%, looking for 0.5% of the money, 0.2% yield. You've got the daily options. These would expire Monday, October 2nd. You can do the same thing in the credit spreads. Had a discussion today about the 0 days to expiration bull put credit spreads and iron condors during a coaching sessions. We had some recent discussions on those, how to set up the search to find those, searching on a Monday for that day's expiration on the broad-based ETFs and indexes that offer the daily options as well. So they're all there. And yes, if you were just buying puts, you could screen for long calls or long puts with the same criteria. But again, to me, it's much harder to make a profit consistently with buying shorter term options, but someone's got to be buying them. If someone's selling them, someone's buying them, right, Amer? So we have to take care of that in that situation as well. All right. All right. Okay, so I just wanted to review that again. All strategies in the covered calls, naked puts, and the bull put credits, you have the picks of the day available. And again, that's just a quick view of the top 3 results, and that is only run once per day. At any time, you can see the full views, more updated, especially if you're on the delayed or the real-time service, by going into the search and selecting the default criteria that are available there for weekly picks of the day, monthly picks of the day. With a few simple clicks, less than a dozen, maybe even less than 8 or 9, you can clear the filters and create your own basic search for short-term put options, selling or buying, based on your criteria, the days to expiration, what you want to see for minimum naked yield, range out of the money, for example, open interest, and what stock criteria you want to enter in as well. All right, now Scott came in early. He says, hi, I made it to the presentation. Going back to what we discussed here on these positions with the weekly picks of the day and the testing that was mentioned, and I mentioned the stop that was here. Ernie says 15% of all trades resulted in the stock, I'm sorry, hitting a stop loss of 7%. Okay, so that's what he uses for the weeklies. If the stock falls 7% from the time you entered the naked put trade, that's the stop loss. What did he do? He just closed it, Scott. In this example, in this situation, the idea was Ernie was essentially challenged by a customer a few years ago. It was maybe 5 or 6 years ago. Yeah, about that. And the customer asked him during a coaching session, well, if you have all these tools and you have all this knowledge, what is the preferred criteria that you would use? And what would the results be over different market conditions? And he said, well, that's why we have the defaults, the at the money, out of the money, tip sheet, naked puts for covered calls, in the money, at the money, and out of the money based on which approach the investor wanted to use. But the customer challenged him and said, well, I want to see what your criteria would be that would result in the best results for weekly or monthly covered calls or weekly or monthly naked puts. But I want to keep it simple. The customer said, I want the simplest approach to see what criteria works best over different market conditions. Simplest, Scott, simply means that if the stock is above the strike price at expiration, you let it expire. You don't continue to sell new positions or roll that position. You run the search the following Monday after that Friday expiration, whether you're using monthly or weeklies. And Ernie toggled different stop losses, not using a stop loss, using a 5%, using a 10%, using a 7%. And the mathematics and the results, actual trading and the testing here, promoted that during these market conditions in this testing period, using a stop loss of 7% didn't limit too many winners. You know, something drops 2% and then it comes back to profitable. So yeah, you're cutting down your losses, but your win ratio is only 25 or maybe 55 or 45%. It's not that great because you're closing too many positions. So he kind of found this sweet spot that he thought for this type of market condition. You know, you can see different changing markets, downs and ups, and a stop loss was around 7%. 10% resulted in too big of a losses that took away the gains and had a lower return. 5% closing too many positions too often, you have lower win ratio, and you don't get as high of a return. 7% was that. But the simplicity, Scott, if that 7% is hit on a weekly position here, the weekly naked put picks of the day, the position is just closed. It's just closed out. No management. Don't roll it down. Don't do anything like that. Don't try to convert it to a butterfly. Don't try to convert it to a condor. Don't do anything ostentatious. Take the loss, move on, and look for new positions the following week, which should have, or in most cases have had, the success rate that they were targeting to get the results that was the target of the position.